Perfect.
Hey, good evening, everyone. Brian Hoops with Midwest Market Solutions, joined by Howard Cottle from our Yankton, South Dakota office, bringing you our August WASDE report webinar. It is the supply and demand report today on August the 12th, and the news came out today. And unfortunately, we were limit down in corn, sharp losses in soybeans and wheat as well. So a tough day in the markets. We're going to try and talk with you about what to make sense out of this USDA report and what we can take away from it, and where do we go in the future. So first of all, let's welcome Howard in. And HK, how are you doing up there in South Dakota?
Well, we're doing fine, Brian. Sunny day up here, a little humid, got a little rain last night, but doing fine.
Howard has been with our office pretty much since the beginning, and also farms a great deal of corn, soybeans in southeast South Dakota, as well as doing his brokerage work. So always good to have Howard on and get his perspective. If you're not a client or a subscriber of our firm, we do have 12 brokers and offices in 10 different states around the Midwest. We clear through RJ O'Brien, and you can find information out on each of these offices, their phone numbers at our website, which is midwestmarketsolutions.com. So we have full discount brokerage services, newsletters, and audio, video, commentary. So a lot of different things that we can offer in addition to this monthly webinar that we try and do after each supply and demand report, any maybe a quarterly if we have some outlook, some things to do on markets. But Howard, let's get started. We take a look at the numbers here from the USDA. We'll go commodity by commodity, but just a general overview here. I'll give the numbers. Howard, maybe you can give us some reaction as we look at corn production. First of all, 13.9 billion bushel crop. That's well above last month, and really the key here is above this average trade guess that we had of 13.1, and yield numbers well above expectations, planted acres above expectations. Reactions on the corn market before we talk about soybeans?
Yeah, clearly catching the trade off guard with them expecting August 12th to be the magical date when USDA and NASS are going to get this right. We were clearly leaning to see 3.5 to 4 million acres was an average trade guess on acres, and then a slight reduction on yield for corn. And what we got obviously from USDA is a slight reduction on acres from our June 28th plantings. They put planted acres at 90 million acres, and I believe the harvested acres come in at 82 million acres. Taking that times a yield bump, not a yield reduction, but a yield bump of 169.5. That was up 3.5 bushels per acre from the average trade guess, and surely caught this market off guard. We were clearly looking for a total production reduction, and what we got is a production increase, and definitely players in the market leaning I want to say the wrong way, but that's exactly the effect of it. Funds are still long in this market, and they let the clutch out and decided to sell pretty hard into this report.
You know what I thought was the most surprising of this? Not so much the planted acres. They were down from what the USDA had said, going into this crop year. They were down from that and above the average trade guess. I'm surprised that they were what they were. But I'm most surprised that yield number jumped 3.5 bushels from last month. That's what kind of caught me off guard. Is I think things had stabilized, but I don't know that they improved enough to justify that big of a yield jump. I mean, you farm out there in South Dakota. I know you've traveled quite a bit here this summer. Does that fall into range of what you're thinking as well?
Well, it doesn't, and you're right at thinking that was probably the bigger surprise, is a yield increase. And I guess we need to keep two things in mind here. One is crop condition. On the Monday reports, we see crop condition, and it's been anywhere between 56 and 58%, good to excellent. Now, that is a condition rating on the crop, not necessarily how well this crop is yielding, but the condition, meaning how good is it? Yellow, or is it green? Is it the stands look good? All that stuff. It doesn't really put a yield to it, and there lies the issue a little bit in my mind. Is normally at this time of year, you see crop conditions on good years range between 72 and 74% good to excellent. And usually that will equate to, a very large yield, mid 170s or higher, similar to what we've gotten in the last couple of years. But here we sit today at 56%. Actually today, NASC amounts at 57%. That's unchanged with last week. And we're talking about a yield that's, somewhat close to those record yields that we've seen in the past. So that's a little bit of an issue with me. The other thing I think the trade needs to be aware of is that these are farmer surveyed yields. This is not a USDA going into the fields and checking ear counts and weights. This is still a farmer surveyed base yield number. And I think it can be skewed, but we were thinking a little bit less. They gave us a little bit more. Hopefully in the next month and prior months, we can see actual boots in the ground looking and identifying this corn yield, along with some calculated weights on kernel size and things like that to hopefully give us a more exact, but it is a tough one to swallow based off what the condition of the crop rating is on the good to excellent category, and that equates to almost a record yield. So yes, very surprising.
Yeah, that's exactly right. It is down from last year, but yes, last year was such an exceptional growing season with all the struggles we've had this year. That's the thing that really caught me off guard. And I've got a slide here when we talk about corn individually. We'll look at state by state production numbers. Quick thoughts on the soybeans. Well, we've got this number up here. Compared to last month, we're down 145 million bushels for overall production. The yield was unchanged, but planted acres were down. So, overall, I thought this soybean number, it's in and of itself, was fairly supportive. It just maybe wheat and corn dragging soybeans down along with them today.
No, that's true as well. USDA opted to keep the same yield as the July number at 48.5. I think producers know right now that number is very skeptical. This bean crop as a whole, I think most would agree that it is a late planted crop. We put in close to 60 million acres in the month of June. And just by the looks of this bean crop in prior years, in the last 20 years that I've been farming, 30 years I've been farming actually, I could definitely see a yield struggling to get somewhere close to 45 in our area. 48.5 seems like a pretty big stretch. Again, it's probably working off the condition of that bean crop, that it's rated at 54% good to excellent. It just seems high. And yet USDA decided to punt and look at that number when we get boots in the field and see how things like Pro Farmer Tours and actual maybe some harvest data comes out in the early down south or out in the Delta states to try to help verify some of these yields. But a very tough number to swallow, but it's probably the most, if there was a bright spot, it probably was soybeans, given the fact just no demand out there for the U.S. soybeans to our buyers, and yet ending stocks came down, and we'll probably look at that here later. But constructive, to say the least. I would look to maybe see the bean market catch a bid sooner than the corn.
Final question on this slide: how quickly do we factor this in your opinion? And we start to go back to trade and weather in August, and whether it rains or it turns hot and dry into the end of the month? Do we have one more day of selling pressure?
I think we'll see some follow-through selling tomorrow. We'd be remiss if we didn't think that. Crop condition ratings tonight on Monday came out unchanged from a week ago. I think the trade was maybe looking for a slight deterioration due to the Eastern Corn Belt not seeing as much rain over the last 2-3 weeks, and yet there will still be some dry pockets out there, although the coverage of rainfall is coming on a little bit better tonight into tomorrow. If that would follow through and come true, that might help stabilize the crop. But I think immediately we'll probably see some follow-through selling. I don't look for a lot more downside. I want to put this whole thing into a football scenario. We're in the fourth quarter. We've got maybe some time left to do more damage to this crop or do some damage to this crop. It is late planted, and it will take an extended period, an extended growing period with excellent weather to, I think, obtain these yields. And anything short of that should have an effect on final productions.
Yeah, I'm in agreement with you. I think we definitely see follow through selling in the night trade. Normally, these funds will get, they'll do 3-day increments. So we could see maybe a down day on Tuesday, maybe Wednesday, sometime in the midday, we start to find some relief from the heavy fund selling that we have, that we've seen here take place in today's trade. So I did put up a next slide here while you were talking, ending stocks numbers, and you talked about the slow demand, this 2.36 billion carryover. This is old crop carryover, and it's been steadily increasing. As our exports are slow, our ethanol demand has been kind of slow. Soybean stocks over 1 billion bushels old crop, that just flows into these balance sheets and kind of adds to the bearish tone. But if you look at the bottom column here, this 2019 and 20 ending stocks, we've got corn as of today projected at 2.18 billion bushels, up from last month. Soybeans down by 40 million from a month ago, and wheat up about 14 million bushels from last month. So the soybean number is, I think, constructive, but we've got a long ways to go. These are some big, burdensome carryover numbers in all three of those commodities.
Yeah, that's correct, Brian. I mean, that doesn't spell, $4.50 corn and $10 beans and $5 wheat. These numbers are sobering. However, they are constructive. I think, versus a year ago, other than wheat, we're going in the right direction. We need a little bit of help from maybe some, like I say, some USDA getting boots in the fields and checking these and confirming these yields to say where we're at. This is clearly a market that probably says something like $3.50 cash and maybe $7, $8, $8 cash soybeans. Nothing to write home about, but I would contest that the ending stocks are going in the right direction. They're getting a little bit lower. Just need a little help from a few other items that would maybe boost the market price, but we're going to have to see more of a supply shock than what we're getting in these prior reports, because demand has been lackluster or very poor in some of these commodities, especially soybeans, as everybody knows. But it's a production issue, and right now we're getting closer to figuring that out. But I think once we get boots in the fields and Pro Farmer Tour gets going here, we'll see if they don't confirm what USDA is telling us today.
Absolutely. That's coming up next week, I believe. Is that right? I think the 19th is when they kick off, a week from today.
Yeah, it is. It's going to be awful interesting. I don't know if we have a lot of time to talk about that, but it'll be interesting to get those folks in the field and see if we can confirm. And it's not going to be so much about what they actually find state by state. It'll be, are they close? Are they too high, or are they too low? Significantly high, significantly low. That's, I think, what we'll be looking for is to find the trend of what they're talking about and how does it relate to the actual USDA numbers we see today.
There you go. This is a little breakdown by the commodity. This is corn. A couple of the big takeaways here is this number. I think the big yield number, 3.5 bushels per acre. That's a pretty sizable jump for 1 month. Then you've got slow demand trends here as far as exports. Ethanol, we talked about that, down 25 million bushels from last month. All in all, it gives us an increase of carryout of 171 million bushels from last month. The trade was looking for something far less than that, and that's why we were so negative today. Is that this was clearly a bearish number for the corn market to contend with when you had a big jump in stocks there that it wasn't planning on. And promise we'd look at a slide here, and I'll get your reactions to that here, Howard. This is state by state breakdown, and you can go through each state, and I think if we highlight the main growing states and take a look at them, it'll probably give us a pretty good idea. We've got Illinois here, major change from a year ago, 29 bushels per acre. Indiana down 23. where do you just don't find a lot of the key growing states having an increase. Here's Iowa down 5 bushel an acre. Minnesota is down 9. Nebraska is down 6. What am I missing there? South Dakota down 3. North Dakota down 7. So, I have a hard time with this as far, this is compared to a year ago, and we are down 6.9 bushels per acre compared to a year ago, but it's going to be tough, I think, given these states that are telling us we've got high yields to actually get to that 169 that the USDA is telling us.
Yeah, that's exactly right. When we listen to our commentators in each of those states that you just talked about, it's definitely not a record crop out there. We all know that and understand that. But is the drop big enough, or are these hybrids just handling it better than we think? Again, this is a farmer surveyed yield of what we got today. It's not boots in the fields. So we'll be looking for confirmation of that. But those are some pretty significant drops. 29 bushels out of Illinois from a year ago, 23 out of Indiana. Look at Ohio, down 27 bushels from a year ago. And you don't have too many states that have big high production like the top 3 that are moving the needle much. So I kind of fall back into that same idea that these are farmer based and not necessarily actual USDA people sitting in the fields counting ears and weighing kernels. I would make one comment on the actual acres. We're in there at 90 million acres. And that's probably, it's still on people's mind, especially when you see FSA, and maybe you'll see a slide coming up in regards to that. But met with our Rich Feltus here earlier today talking about total planted acres. We are down on total planted acres, 14 million acres. Last year they planted 226 total million acres on corn, beans, and wheat, and we clocked this year in at 14 million acres less, 212 million acres of corn, beans, and wheat. That is where we probably see some of that makeup of the PP acres on corn at 11.2 million acres, and soybeans clocked in at, I believe, 4.7 million acres, almost 15 total million acres between the two crops. Where did they go? That's where some of that went, is the abandonment of total acres from last year to this year. So it does, you can kind of find it. It still doesn't match it 100%, but in the end, I think it's still going to come down to actual yields and how we find those yields moving forward.
Yeah, I think you're exactly right. I mean, it's, I don't think we're going to see some weakness here in the next couple of days, but I guess I don't think it's something to panic over. We've got some dry weather moving in, and until we get, as you mentioned, boots on the ground, seeing some actual harvest data coming in, next month, the USDA will actually use their test plots to determine yields instead of farmer surveys, so that things can change, pretty rapidly once we start getting some actual harvest numbers. As far as our balance sheets here, I got 3 columns that I did here. One is today's column from the government. This is the FSA number, just using the acreage number the FSA said they had enrolled for farm program benefits, and then I put a stab at where I think maybe the acreage numbers are going to come in. And I'm probably fudging on these acreage numbers a little bit. The yield numbers I just went with what the USDA had, but I think there's a pretty strong evidence or strong case that those numbers could come down going forward. But even if you use the FSA numbers of a smaller planted acreage numbers, you're still looking at ending stocks 1.5 billion, which would look pretty tight compared to what the government told us today at 2.181.
Yes, that's exactly right. Don't disagree with anything you're showing us here. Just comparing it to a year ago, we are sitting a little bit better than we were a year ago, but it's nothing to give us that big pop in the market unless or until we can prove this production is incorrect. And right now, these are the numbers we're going to live with. But the scenario that you put together here, that's exactly right. 1.532 billion bushels using the FSA data at 85.5 there, 85.8 million acres. We could talk all day about how these acres may or may not be there. It's really going to come down to this yield. Can we actually scratch out a 169.5 yield on a crop that got delayed so bad that they're trying to make us believe that that's exactly where it's coming in. And unfortunately, that's the data we have to trade on. That's the data we will use. But I am in agreement with you. I don't think we'll see a lot more downside pressure as the trade will get the grips or come to the grips with there's still time left in this ball game, and we'll see what happens as we get more information.
Okay. All right. Let's take a switch over to soybeans, talk about some of the numbers there. Probably a less exciting balance sheet compared to the corn. We did see some positive changes here with planted and harvested acres down 3.4 million. No change to the yield. So production is down 165 million. That does help out as we saw exports drop by 100 million and results in ending stocks at 755, 40 million less than last month. So it's it's a step in the right direction. And I mean, are you in agreement, Howard, that these yield numbers that we're using, they are down from last year by 2.5 million or almost 3 million or 3 bushels per acre, excuse me. Are they subject to go up more, down more? From you traveled, what do you see on yield potential?
It's difficult. Like I say, 60 million acres planted in June. That's unprecedented. I think USDA has taken its slow approach to bringing that down, knowing that this crop isn't in a dire strait due to weather. I mean, it's not hot and dry out here. The soybeans are growing. It's just that you and I maybe know that this crop clock is ticking. And honestly, soybeans are a little bit different than corn than that their yields are determined off the amount of light in a day, and we're going the other way right now in that. So to me, I think USDA kind of punted here again, kept the yield unchanged and looked for a more drastic change in yield in the September and the October reports. And that'll be based off of boots in the fields, maybe the Pro Farmer Tour coming up to see if they can identify that they're finding quite a bit less pods per square feet than what they have in years past, and maybe that'll dictate a different yield. But USDA clearly took a punt on that, kept the July number at 48.5 this month. The one thing I would say about the balance sheet, there probably is a little more room to go on exports if they do decide to lower yield. I could sure see that being offset by maybe some more reductions on export business. As we know, our shipments are lagging where they need to actually be as the calendar year comes to a close here in August.
Absolutely. All right. We've got a state-by-state chart here, Howard. If we take a look at this, anything stand out to you? Ohio's, it's a big yield drop. Illinois, a big yield drop, 10 bushels per acre compared to a year ago.
Yeah, definitely significant. They're identifying the states that had the issues, getting those crops in the ground. Just the lack of rainfall that they've seen in the last 3-4 weeks. I think they're taking their stab a little bit on those yields in the eastern corn belt, but they're being more cautious back here in the central and the west and northwest, as we've seen a little more moisture than what they've had out east. But to me, in my mind and in my gut, this 48.5 bushel yield still strikes me as extremely high. Just looking at the bean crop as a whole, yes, it's got color. Yes, it's got moisture, except some of these stressed areas out east, and the areas are large. I mean, they're probably a third or so in Illinois, and maybe half in Indiana, and then again another half in Ohio. But the common theme on the soybean is the plant size, and it's just not filled in. The third flush of weeds are kind of coming through a little bit. We got farmers that have basically taken a pass at treating these soybeans with a fungicide or an insecticide. They've basically spent their money on this crop. And usually when I go and see this type of a bean crop, due to late planting and moisture stresses, both without rain and the ones that are being inundated with rain, you just usually don't see a strong bean yield. And it's the eastern corn belt soybean yields. In years past, they've been significantly higher than where they've been showing today. You need that big high yield out east to help offset some of these smaller yields out here in the west. So to me, I'm still going to lean. It's a sub 40 type bean crop right now, and that could sure move either way depending upon how we finish the growing season out, whether we miss some rains, get rains, and or have an early, or I should say a normal type frost. Sure could have hurt all these yields that are out here, but these are the numbers again that we're having to deal with, and I'm not going to argue too much with the state-by-state yield that USDA gave us today.
Yeah, you and I have been around long enough. You remember 1993 when we had extreme wetness, and even 2000. I think it was 2003 when we had some aphids that it was hard to determine how that affected yields, and it really took until September when we started combines to see how bad or how good these extra yields were, and that may be the case again this year. That um, we may not be able to rally much until we get harvest actually rolling and see where we're coming in at it as far as yields at that point.
Yeah, exactly. I think people just need to take a little break here, absorb what we've had and seen today, and it's going to come down to what the combine shows on the monitor, and that'll dictate the direction that USDA will take on these yields, and that'll be more proof of are they correct or on the right track, or have they missed the mark? And unfortunately, we're going to kick the can down again and say we need to wait another month until we start seeing some of that data come in. But that may be the evidence that you as a producer may be seeing with your own eyes in your own fields, and you knew all along, but we're going to need probably that data to get USDA to either adhere to these new yields or, hey, maybe they are on track. It'll be shocking if they're on track.
Exactly. I put this slide up here, just kind of comparison. Same thing as corn. We've got today's USDA data, the FSA acreage number at 74, a little bit less than what the USDA said. And I left our acreage number the same, but I dropped yield 1 bushel per acre just to demonstrate how things can change given all the other fundamentals remain the same. We can drop carry out from 755 down to 610 million bushels here if we see that type of production loss, and I think there's some room for exports to improve. They've been pretty poor this year, and it may not be in the next several weeks before things improve. But China is starting to ship a few more soybeans out that they've had, and we've seen some decent exports here in the last several weeks. And so I'm not maybe quite as pessimistic as what the USDA is at. We may get some of that export business back, and that would certainly help us out as far as our carryout numbers going forward. So we're going to look real quickly here at wheat and then wrap things up. The USDA did increase bushels per acre today. Wheat kind of just flew under the radar because everybody's focused on corn, but that's a 1.6 bushel per acre increase on harvested wheat. They did increase exports by 25 million, which I thought was a step in the right direction. Our exports have been good. Today's inspections were the second largest of the marketing year, so we are seeing decent demand for our wheat at these cheaper price levels, and our ending stocks at 1.014, not a significant change from last month by any means, only 14 million bushel increase, but I had to think wheat was drugged lower by the corn market today, and the heavy selling that was wanting to take place in corn just kind of moved over into the wheat market.
Yeah, I would agree with you. The yield doesn't surprise me. We've heard a number of units of yields coming out of the Kansas crop, just blowing them away on where the yields have been in years past compared to they came into it. Now the quality has slipped a little bit, but it's total bushels that are hitting the market. That will compete with corn down there, especially in the panhandle of Texas. But not too much. Wheat was definitely the child in the closet today and not really taking any P's and Q's from its actual numbers. It was probably watching corn more than anything, and as it was getting sold, wheat was following right down with it.
Very good. Here's a quick supply and demand balance sheet here. Just leaving pretty much all the numbers USDA gave us virtually unchanged. We're in that camp where ending stocks may increase a little bit more if we see a couple more upticks in production. But going forward, I don't know that there's much to change on the wheat balance sheets. It's going to be about what the corn market does and supply and demand, just demand factors overall. As we finish up, Howard, marketing strategies. If you're a producer that has some corn sold, is this a buy? Do you look to buy it back ahead of harvest? Do you cover those sales now? If you do, how do you do it? What are your thoughts? If you're a farmer, what would you do in somebody's situation like that?
Yeah, it's interesting. We've been dealing with this production so far since the planting started, and we had hopes of that market moving higher as it basically peeled the onion back on how this production was coming, and so far we haven't had a decent pitch to swing at. But we've dumped a lot of corn when we were in the fours as far as the cash prices, so we're satisfied with cleaning up that old corn. But we have taken shots at reowning this corn and the options. Again, I'll use that analogy that this is a 4-quarter game, and we're in that fourth quarter. If we've made significant sales, or if you're a livestock producer who has been going hand to mouth on this market in the cash, I would guess that your cash opportunities to buy are getting slim right now because of the break in this market. To me, we get down in this 385 range on December corn. I do think, guys, I know it might be tough. It just seems like we're always getting after it. But if you've been out of the market and you sold a significant amount, which I think most people have done, it's probably time to look out. And I'd probably stretch out into the March now instead of straight December. Those options are relatively inexpensive. I would get something fairly close to the market if we get the D's down into the 380-85 range, and see if we can't play this card yet as we finish out the growing season, because there is a lot of weather left. The clock is ticking, and I would even say that in the bean market, this thing is sitting there at a point where we've dialed in about as much bearish news as you can throw at it. I get ending stocks seem to be quite high, but in a market where we have lost basically all the Chinese business, I mean, you couldn't throw any more terrible news at the trade war. It's basically we have no deal. To me, we should be finding support in this market, and maybe we found it already today and we start turning this. This will be a market that's probably spins early, but there again, I'd be interested in owning some options as we go out. I'm not interested at this point to make new sales. I think we would rather see the evidence of boots in the field to see if they're verifying what we think we know and that USDA hasn't figured out yet. But I would use option strategies, and I'd reach out maybe in the March corn of 2020, and I'd probably reach out into either January or March on them soybeans to pick up some ownership if you so inclined to do so.
Very good. I like the marketing ideas, good marketing strategies. We've got a very long marketing season to go, so don't panic after a sharp down move today. There will be better opportunities ahead. So, Howard, thank you for joining us. Thank you, everybody, for listening and your participation in the meeting. As always, contact us if you have questions. Set up your brokerage account with us today. This has been Brian Hoops for Howard Cottle, signing off. Have a great night.